Okay, so let's talk about the overall trend. Now, this video the hope of this video is that I will save you months upon months of aggravation and frustration. A website that I have done a lot of analysis for in the past, so I won't name them, has an indicator that tells you what the trend is on the various time frames of an asset. So, for example, here on the euro dollar, it might say, well, it's a very positive trend over the last, on the weekly chart, and it's negative on the daily, but it's positive on the 4 and the 15 or whatever. The problem with that is you get too much information. True trading, true analysis for me is as simple as it can possibly be, is how you want to do things. So when I look at this chart, the first thing that I would point out is that at the left-hand side, we are in the left-hand top corner, basically. And as we close out here, we're in the right-hand bottom. Well, that's a downtrend. Now, having said that, I can see that over the last 3 years in the euro dollar, we've gone sideways. Clearly, by now, this is a range-bound market. So there is no trend. You know that there's going to be, and I happen to know this because I do the analysis on this every day, there is an area between 105 and 115 that the market has been banging around in. I think there's more proclivity for downward pressure, and that's because of the significant fall. The trend remains either sideways with a negative bias, might be a way to put it, because we've had this dramatic fall. Now, once we break above here, then things could change, but we haven't. We've made several attempts, and we haven't been able to. So one thing that people will do, you'll see this a lot, they'll just put a moving average on a chart. This is a 50 period moving average, and this just shows the average price over the last 50 bars, in this case, the last 50 weeks. You can see it rolled over. It was very negative, and we collapsed. Well, now we're going kind of sideways. Again, this looks like a very sideways market. So this is one way to see if you can suss out the trend. I personally like eyeballing it. I just go ahead and remove this. And the line chart tells me clearly we've been bouncing around, so we are somewhat trendless, but we were obviously in a downtrend here, obviously in an uptrend here. And why? Because we were going higher and higher and lower. It does not need to be any more difficult than that. The weekly chart matters. The monthly chart matters even more. The problem is, and I'll show you here on the crude oil chart. In this weekly chart, you can see it's very similar. We have fallen, we have bounced. We have bounced a bit from the lows. We are looking stronger from there, but we're still, for the most part, sideways. And if you put a moving average in, again, that's the 50. We rolled over, obviously in a very negative environment, and then popped up a little bit, but now it looks like we're going sideways again. Well, watch what happens when I switch to the daily. Now, all of a sudden, the 50-day moving average looks very bearish. The 4-hour not only looks bearish, but it looks like it's actually affecting the market, which it is not, by the way. And then the 1 hour, it looks like it's trying to turn up. 30 minutes is grinding a little higher. 15 is slightly positive, and 5 is very positive. That's the problem when you start talking about the trend. So this is how I have come to a solution. I look at the longer term chart and I determine whether or not I believe we are in a downtrend or we are range bound. Currently, this to me, remember these are weeks. This goes back basically a year. Currently, we are in an environment where we are going back and forth. So it's range bound. But I believe that we have more of a downward bias because of this massive sell-off. And as I record this, that's not a real stretch by any stretch of the imagination when it comes to crude oil. Crude oil just looks horrible. So, obviously, you can only trade in one direction when the markets tell you. And that's really what you look for because you can really make some money there. In this pound Canadian dollar pair, you can see that we have fallen off of a cliff. So what you look for is some type of discernible trend, and you follow it. You simply do not try to fight it. Again, the daily, the 4 hour, they're all going to look a little bit different. The 1 hour, wow, we're forming a W pattern here. It could be the beginning and the end of the downtrend. Well, I don't think so. These longer term trends matter. You have to pay attention. So this goes back to putting numbers, round numbers on the chart and kind of seeing how the market has reacted, or if it has, to specific numbers. And then what you're looking for is some type of signal to basically what you're looking for is some type of signal to dictate whether you should be in the market or not. And you need to have some type of bias, which is the trend. So when you look at this chart, certainly your bias needs to be to the downside. It doesn't mean that there's always going to be a trade, and that doesn't necessarily mean that you're looking to sell every waking moment. There are going to be times where you're better off staying out of the market. But right now, this looks like a bearish market. If you don't see it that way, pull up a line chart. That's very clearly negative. It was positive for the longest time, and then we've fallen apart. So then what I'll do is I will zoom in and I will start looking for trades on a preferable time frame, a daily or 4 hour or something like that. And there are a multitude of reasons to get into a trade, but you can see that I have combined the support and resistance, the large round numbers on a higher time frame, with a trend. So now I have a little bit of a thesis. Okay, I want to sell if I get a signal to sell somewhere around the 1.70 level. We very well could. We may not. And if we don't get a sell signal, that's fine. We just look for resistance at the next major area, in this case, the 175 level, and we move on. We don't get stuck on this one chart. This is why I hate it when people tell me, well, I'm a new trader, so I only trade the euro dollar. That is a really, really difficult way to work this out. It doesn't matter. The currency pairs really don't matter. They're all the same. They're all charts. So again, I have a downward bias in this. Yes, we've had a very nice pop-up, but when you look at it, and I will use a Fibonacci retracement tool, and I will have to change the colors here so that we can see it. But you can see even with this nasty pop-up here, we only popped up to the 38.2%. We've only retraced 38.2% of the move. So we're still in a downtrend. That's really all there is to it. I don't care what the 5-minute, the 15-minute, the 10-minute is doing. So look at the weekly charts, monthly charts. Just follow where they're going. If it's not clear, move on. Unless you're looking for some type of range-bound trade. And some people do quite well at that. Of course, we'll look into that. But the trend is very important. The trend basically should be thought of as this. We are falling. We are in a downtrend. Each of these levels are areas to get in and get out of the market. Again, don't overcomplicate it. We're at the upper left-hand side. Prices are lower over here. It's a downtrend. Thanks for watching. I'll have a new one for you in quick and short order. If you got any questions, you can email me. Otherwise, we will return with more.